every one of us has that feeling inside that what is the next shoe to drop? It's been a year and a half of bad news after bad news, bad data after bad data. And quite frankly, the fall is coming, and September, October have been some very interesting times in economic history. And quite frankly, if it was me, I would be looking to not spend a bunch of money. This isn't financial advice. I'd be looking at ways to protect what I have. And quite frankly, I think this is a great time to be talking about precious metals, actually physically owning it. I know that there's a lot of people out there in Wall Street Silver that have been sharing these videos and the information. I think it's so vital to just get ready for, quite frankly, something that could, like they're saying, a Black Swan event happening.
All right, welcome back to Wall Street Silver for a special edition of Going Down the Rabbit Hole. We wanted to talk today about what's going on with Palantir. And as many of you know, it's been in the news that Palantir invested $50 million in gold bars, gold bullion bars, specifically to counter, and this was the interesting part, that they actually put in their filing, Travis, Lee, a Black Swan event.
Yeah.
And so we have here today with us the one, the only, the economic ninja, and Lee Justo from Wall Street Silver to figure this out. What's going on? Why would they put that into a filing, a Black Swan event? Travis?
Yeah, so we were speaking a little before the interview started, and I was explaining how I believe that there are times throughout history where the powers that be, the people that, call them whatever you want, but I like to call it a market maker or market manipulator, has to judge where the perceived value is in the market or the perceived amount of information that's known, right? The knowledge of any asset class. And throughout time, we've seen people push out propaganda to weigh the sentiment of investors. We're going to get to the Black Swan, but I brought up Tesla and them not only talking about they're looking to change, they did change their corporate directive to be able to own Bitcoin and gold, but they actually spelled out specifically, not only are we going to own paper gold contracts, but we're also going to be able to hold physical gold. That was out just completely shadowed by the Bitcoin because there was a lot of people wanting to run with that, right? Now we have the next level. We have a company coming out and saying, and this isn't a small company, they're coming out not only and saying, not only are we buying physical gold, but we're doing it because we believe something bad's coming. And then if that isn't enough to shock you, we literally are a data firm that brings in information. And one of our largest clients happens to be the CIA. So what's interesting is that I don't think that, we're at that moment like the Howard Stern of economics right now. Let's see how far we can push this to see how many news companies pick this up. It's one thing to have the AP Newswire pick this up and run with it, and a bunch of people, because there's, it's a slow week in the news cycle, pick it up like what you just showed in the New York Post or Times. It's another thing to really see how long this cycle lasts, the news cycle.
Yeah. So as you said, Palantir was founded by Peter Thiel, who was the founder of PayPal and the PayPal mafia. He's all hooked in with Elon and a bunch of other, all the guys who founded LinkedIn. I'm not going to go into PayPal mafia, but all the people who made their first fortune off of PayPal basically then scattered and founded some of the, YouTube. The guy, or all the, I forget if YouTube was in that group, but those guys went out and founded some of the biggest companies in Silicon Valley now. And as you said, Palantir works with the CIA and the Pentagon. And you got to wonder what sort of access to information they have.
Yeah.
Lee, what do you think?
Well, one thing that's missing out of this conversation so far is InQtel, which is a venture capital firm formed by the CIA. And a lot of companies you mentioned all kind of have their genesis within this venture capital fund. What I find interesting about Palantir now is not only are they investing in gold, but they've also been investing in a ton of SPACs. They must know stuff that we obviously do not know. I think that's at the core of their business.
Yeah, so I'm glad that you brought up In-Q-Tel because Palantir, for lack of better me actually being able to say it properly, it's interesting because right on the front page they talk about how they build software that empowers organizations to effectively integrate their data, decisions, and operations. And it is interesting that you're putting this tie together with PayPal and all these people that are very successful. Successful people hang out with successful people. I mean, that's how you become successful, right?
Yeah.
And it's interesting that here now we have a data company that all they do is build software to take in bits of information. And I believe what you're seeing there is they're using their own software to take in economic information, inflation, all kinds of information right now, and put it together and come to one conclusion: we need gold. And that's what's super exciting to me. Now how they purchased it and all that hopefully will be coming out in the near future. We're going to find out how they're, storing it and all that good jazz. But it's very interesting that they actually talked about gold bars. And I think that's their way of subtly putting out there. We're physically taking ownership of this. And we're seeing a larger and larger narrative being built, not only in these kind of revelations, but it's happening all over where billionaires are talking about how the markets are getting a little top heavy. We see people like Ray Dalio going into gold, talking about things like cash is trash. Michael Burry, there's so many people out there that are very successful. What blows me away is that the general public they would rather listen to a commercial that has lots of flashing lights than listen to a billionaire that's saying, this is what I'm doing. And they aren't following them. They're following like the glitz and glamour of the stock market.
Or they're watching a lot of Cathie Wood videos.
Yeah.
Oh, dude. Dude, isn't that funny? No, Lee, you bring up a great point because there's always a person of the moment. There's always who is the hottest thing. And right now, Cathie Wood is trending like crazy. Here, Lee just brought up a great person or Cathie Wood, two people that are out there talking about how great things are, right? Boom, 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 boom. It's like Jim Cramer the week before Lehman Brothers collapsed saying, hey, I think it's a buy. Right. But what's interesting is people remember or idolize the people that are giving them, pumping them their ego. And, it's the When Lambo kind of movement. What's funny is we all know that Peter Schiff did some amazing work before the dot-com bust. And he also did some amazing work before the 2008 crash. Right. People don't tend to remember those people. And it's interesting that this is what we're coming against. The narrative is clearly saying the markets are topping, all markets, inflation is rising. People are going to find it harder and harder to afford just their normal lifestyle. And yet we're watching the actions of billionaires and large corporations moving out of the US dollar right now. And it just absolutely blows my mind.
Well, here, let me, the question I raised on Twitter was, I actually looked up the definition of what is a Black Swan event. It's by definition an unpredictable event. But what could they actually be? Why would they use that language, Black Swan, if it's unpredictable, but they're expecting it?
There's so much going on in the world right now. We have these massive protests all over the world. I mean, Australia and France are most recent, but we've had them in South Africa. The very social fabric that's kind of held together the Western world over the past, say, 150 years is just kind of collapsing around us. And then on top of that, we have the World Economic Forum talking about the Great Reset. We have all the United Nations states working on this Agenda 21. It's all like a confluence of all this stuff happening at once. I think they know the economic system that's been built over the past, since 1913, central banks, it's starting to come to an end. I mean, the writing's on the wall. I'm sure you'd like to add to that.
Yeah, so you're bringing up total facts. And it is interesting. You bring up the World Economic Forum, you go to their website and you look at how many people have actually read the articles that they have on there, because they actually have counters for a reason, and it is extremely low. The facts are very few people, even when you say something outrageous, even though it's the truth, you send them a link, most people won't even click on it. They just don't want to know.
Turn it down. It's like, last time. Meanwhile, there's the facts.
Exactly. So now let's talk about emotions. In the last I don't know, 5-6 months, I talk every day about economics to people that I know and people just off the street. And I ask them all the same question. Do you have a feeling inside that literally at any moment something really bad is going to happen? And it is 100% yes. Regardless of the facts that we have economic slowing down, we have hyperinflation that is transitory through like lumber, steel, things like that. Then they come crashing down, or we're about to see some more transitory hyperinflation. There's facts, but then there's that gut feeling. And what's interesting about most humans, they don't understand how to identify and define their gut feeling. And then once they define it and understand what it is, actually acting on it. It's a very, very rare skill. And so if anything was to describe a Black Swan event, I don't think there's ever been a time in history where everybody feels that at any moment, something really big and bad could happen.
I'm up in the Northeast right now, and we're expecting a hurricane. And it's a well-known fact that animals tend to start acting up before any kind of event like this. And you just have to wonder. I mean, we are all animals.
Yeah.
So we must have something going on inside of us, knowing something's coming.
Well, I want to share something else that hit my news feed yesterday. Lloyd's Bank. We always talk about BlackRock buying up everything. Now it's, the UK. Lloyd's Bank is, I guess, the BlackRock of the UK. And they're buying up 50,000 homes and aims to become the UK's largest landlords. And this sort of plays into the World Economic Forum's, what they've been saying of you will own nothing and be happy. I mean, it's sort of just they say it. They tell you what they're going to do just to see whether you respond or you react or you fight it. And if no one's fighting it too hard, then they go forward and do it.
Yeah. So, and I want to add to that because it's interesting. This is what happens in a zero interest rate environment. Corporations are starved for yield. They want to continue their growth, the trajectory. They want to keep getting larger and larger and taking more captives. So they have to diversify their investments. And this is what this is what Blackstone does. They are searching for yield in now rental properties. What's interesting is there was a comment in one of my sections. I don't think we talked about this, but I was talking about this Palantir buying gold, and someone says you should never buy gold until you buy a home first. And it's funny how people put priorities. They put different investment classes in priorities, and it's funny. There's corporations that are buying up homes right now, and the prices are going up because they're getting money at zero. But the consumer can't do that. And we have been buying gold and silver for years, my company, and even though the price fluctuations happen, we understand the long-term trajectory. And as these currencies continue to fail and collapse around the world, setting off liquidity event after liquidity event, pretty soon it's going to hit the developed nations too. And it's really interesting because right now I also feel in my gut, and Lee, I'd love to hear your take on this, but we have got what I believe is we could be looking at a possible liquidity event coming up soon because of the strengthening dollar against all kinds of asset classes. And I'm talking about just in the last week and a half, 2 weeks. And there's a lot of people in the investment world right now that are going, this doesn't make sense. What's going on? Why is the dollar getting so much stronger after we've just seen a huge run up in all kinds of asset classes due to inflation over the last 6 months?
So, we had Bitcoin. Now we've had the major indices, except for the Russell 2000, continually reach all-time highs. And that's been driven by a very small basket of stocks that heavily weighted in these indices. So the question really becomes, from my perspective, with the Russell not reaching all-time highs, we've been in a bear market for months, even despite the all-time highs. Yeah. And I think that's a symptom of decreasing liquidity. I think the Fed is losing control. And I think this is why we see Michael Burry coming out. And also obviously this with Palantir. People are expecting something really bad to happen.
Yeah, the market highs were reached with what, 5 to 10 stocks. It's so narrow right now. So if something pops, if whether it's the Fed tapering, which I don't believe they can taper, or just the market losing confidence and start selling off, or one of these big banks imploding. There's counterparty risk all over the place. And that's what's going on with all the 1.1 trillion in repos right now, or reverse repos. It's because there's no interbank lending right now. banks don't trust each other enough to lend overnight. So something really weird is going on, and something's due to happen. And seeing something like Palantir buy 51 million in not a GLD, they didn't buy an ETF.
Yeah,
they bought physical bars. All right.
I actually saw a statement, Jim, from I think it was their COO, but he said basically that we could take physical delivery of this.
Yeah. So what does that tell you? That they didn't, GLD, they could move $51 million in and out of that in seconds. All right. 51 million is not a significant for a big or any number of ETFs. They made the conscious decision to get 100-ounce gold bars, however many bars that is. And which tells you they didn't trust the ETFs. They didn't trust the paper.
It's a very good point.
And that's just so striking, because I can't recall any scenario where has that ever happened before, ever.
There is an argument to say that Tesla was first mover in this, right? The first major corporation to come out and state we are changing the way we do business and recording it in our corporate ledger or documents that state that we can hold assets outside of the US dollar. But now we're starting to see a chain of events because corporations are getting a little bit more brazen, a little bit more outspoken, and a little bit more prepared. Now, something I want to reach out, because obviously we tell people that if you don't hold it, you don't own it. You don't want counterparty risk. And that's why I think these corporate documents are being written as such, like Lee says, that we could take physical ownership, right? What's interesting to me is a lot of people ask me, hey, Ninja, what do you think is going to happen if the stock market crashes or paper, is gold and silver going to go down? I said, absolutely, it will. And they look at me like, why would you tell people to buy it? And I said, because the paper derivative is so different. And we've just recently seen this when Wall Street Silver actually hit the market, was when the paper price gets smashed down. We see so much buying, and we can tell right then in real time how tight the market is, because the pawn stores, the coin stores, all the inventory is gone in a day. The online brokerages have a few days, they're gone. And then all of a sudden they're running to the mint, and the mint gets totally bogged down. And then we see a massive shortage. So we see premiums shoot through the roof. So I want to make this point that these people at these companies are very intelligent. They know what happens when there's a market crash, that paper derivatives get smashed down, but it doesn't matter, because just like in 2008 when Lehman hit and we saw paper get smashed from 18 to 9, the Silver Eagle still was around $20 at any store you went to. That physical price held its value. And I think that's the really big takeaway from here, is that the big boys are coming out and saying, I want my gold, I want my silver. And we're not only talking corporations, we're talking about a lot of billionaires too.
Yeah, I think it's more than just the corporation level. I mean, we talk with a lot of guys, and the people who we interview, we talk with them off camera before and after, and they tell us a lot. Sometimes those guys who Lee, Ivan, and I, the guys who we interview, they tell us stuff that they don't say on camera. And
very, very true. And sometimes for a very long time afterwards.
Yeah, and I have like, remember a couple of weeks ago, the president of France, Macron, he said he suggested that all of the G7 countries should sell their gold reserves to fund debt relief in Africa, was the excuse given. And this was, I don't know, a month, 6 weeks ago, something like that. And I just recall thinking at the time, this is the Davos crowd who pulls his strings, telling him, dump your gold, because they needed a source to buy large amounts of gold without driving the price up.
Yeah, that's a good point.
The purpose would be, they don't care whether the countries, the G7, have the gold reserves when a reset comes. They want the billionaires to have the gold reserves when the reset comes, because he who has the gold makes the rules.
Jim, did you notice, sorry to jump in, but did you notice that Palantir's revenue had actually jumped 49% year over year for the second consecutive quarter? They just announced that a few days ago. So I want to also bring out that, there's a lot of companies that get sort of stuck in their movement or in their numbers, and they're doing really good, and they're usually not looking at what else is going on in the world. Here you have a company that their revenue is exploding, and yet they're still running to safety right now.
Yeah. Well, a lot of it is, you're sitting on a lot of cash and you can't, what is it? What does commercial paper pay right now? Most of these companies that are sitting on billions in cash, they're invested in short-term, maximum 30-day type of locked up money type of investments, commercial paper. And that's got to be what, 1%, 0.5%? What is that what does that pay?
Lee would know this better than me. I'm not following the bonds.
Yeah, but I mean, it doesn't pay.
You're losing money basically because of the rate of inflation. I mean, whatever your part.
Yeah, you're losing money. So you're losing 4%. You're losing 5%.
I think it's very telling that you have BlackRock and all these companies going after hard assets, not just gold, but real estate.
Oh yeah. Well, isn't that the theory? You or what they did during the Weimar Republic? All the people who were in the know, they were borrowing everything they could in the Papiermark, the Weimar Republic's paper currency, borrowing in the currency they knew was going to be devalued, and then going out and buying hard assets with it.
Yeah.
And then after the devaluation, the hyperinflation, whatever, then paying down that debt for nothing with worthless marks.
And you know what happened after that, Jim? Though, like the general public eventually caught on to what was going on.
Yeah, but he was still a billionaire in those terms. In their day, he was massively wealthy.
Well, what I was going to say is the general public eventually just caught on to what was going on with the dollar, the Reichmark getting just completely devalued, and they started buying up hard assets, anything they could. And there's this famous story about a woman, all she could buy was bedpans, and after the crash, she was just loaded with these bedpans and couldn't do anything with them. But when you're in a situation where you can't get hard assets, all the gold and silver's out. Travis, you just mentioned like when they slam the paper market, demand for physical goes through the roof.
Yeah.
I mean, that last slam of physical gold and silver, spot price, physical gold and silver is just going to disappear off the market.
Yeah.
Yeah.
We'll get it anywhere.
Well, it's interesting. We talked to Miles Franklin. We talked to SC Bullion. They both said when that first smackdown happened just a week ago, they saw massive buying in the first couple of days of it. And then it tapered off because I think a lot of people are going, well, what's the next shoe to drop? But when all of a sudden it spikes because all of a sudden we have hyperinflation stuff, the story is going to be, when do you sell? And that's when people are going to be too scared to sell because it's going to be every day. It's just like the .com boom. It's like, my JDS Uniphase is going up and it's going up like $25-$30 a day. And I'm scared to sell.
A lot of people, we talk hyperinflation. Everyone wants to talk about Germany, but there was a time period when France in 1775 to 1796 had hyperinflation. And I went back and I this is a 12-part thread on Twitter I did, but I went back and looked. Their inflation at its worst was 5% per day.
Wow.
I mean, and we're talking, it's just prices were doubling in 15 days. I mean, when it really gets going and total confidence is lost, it happens quick.
And what's crazy is the Fed's mandate's what, 2%? And we're sitting at right now, there's government numbers in the 5 percentile. Blowing away.
Their mandate is full employment and state. I mean, I don't think 2% sort of a verbal goal. I don't think that's actually written anywhere.
Yeah, that's true. They talk about it a lot.
But I mean, they're basically ignoring that side of the mandate and just. I mean, the mandates are in conflict. You can't do both.
Yep.
They've tried to do both. They've tried to jawbone it, but at some point there's a conflict there, and they've already made the decision. They're going for full employment. They're not worried about the inflation. They're making noises. All this talk right now about tapering, it's total theater. They're not going to be able to taper. In the middle of them tapering, they just did another 85 billion last week. I mean, supposedly their verbal guidance is 120 billion a month. They just did 85 billion in 1 week on their balance sheet going up. I mean, they're not tapering, they're accelerating.
Yeah.
There's literally $7 trillion in debt is maturing, federal US government debt that has to roll over. If those investors don't pony up again for, less than 1% returns nominally, if those investors say, I'm going to not reinvest when my U.S. Paper bonds mature, I'm going to instead take that and go somewhere else. who has to buy it at that point? Foreigners are stepping back from buying U.S. treasuries and notes. So who has to step in and save the bond market, the government bond market? It's the Fed. The Fed, there's just no chance in hell the Fed tapers. I think they're actually going to accelerate. You're going to see numbers per month way above 120 billion.
We've seen that in history, though. Fed taper talk is a real term because it really happens. They go through these months and months of just sort of jawboning or stringing you along to hold up as much confidence as possible. When you know there's a crisis, it's when the head of the Fed is giving monthly or weekly press conferences to the world. And we saw that with Ben Bernanke back in 2006 when he was trying to hold back everybody's, fear, because of the mortgage market collapsing. And he famously said on one of those, it is impossible for all homes to fall at the same time in the country. And it was just interesting to me because he was coming out once a month and addressing the nation. And that's when you're at max fear. And I think like what I saw you bring out, Jim, with or I saw a tweet of Jerome Powell, you pointed out the other day about the dude, this is perfect. Looking at how he talks.
Form the core of our financial system are much stronger, much more resilient. That's true of the banks. I think it's true of the CCPs. We want it to be true of other non-bank financial intermediation.
Whenever you need to lie, just don't look up and away, rub your neck, or touch your ear.
So I think that's monetary policy should be, to me,
So, okay, think about it. He said things like, I think, we want. This is a classic Fed, like it's just jawboning. They're trying their hardest because everything's falling apart so fast.
Mm-hmm. Yeah. And we'll see. I mean, when they start sending out everyone each week, all the different Fed governors to try to talk a certain message, but then what their balance sheet shows is actually entirely different.
Yeah.
You know what I think might happen? You know how they earlier this year they changed the reporting on M1 or M2, or they discontinued some reports, or the weekly reports they changed to monthly, and just to whenever they don't want you to see what they're doing, they change reports so that everything you saw before that's no longer valid. When they stop reporting the Fed's balance sheet, or they change the reporting of the Fed's balance sheet so that everything they're doing looks different, or it's susceptible to adjustments or something like that, that's when it's getting out of control. They're gonna mess up all the graphs. All right. Hey, so Ninja, final thoughts?
Yeah, we were talking earlier about that gut feeling. People understand, not only seeing headlines of companies that are now positioning themselves for protection, but also billionaires, very successful people. But also every one of us has that feeling inside that what is the next shoe to drop? It's been a year and a half of bad news after bad news, bad data after bad data. And quite frankly, the fall is coming, and September, October have been some very interesting times in economic history. And quite frankly, if it was me, I would be looking to not spend a bunch of money. This isn't financial advice. I'd be looking at ways to protect what I have. And quite frankly, I think this is a great time to be talking about precious metals, actually physically owning it. I know that there's a lot of people out there in Wall Street Silver that have been sharing these videos and the information. I think it's so vital to just get ready for, quite frankly, something that could, like they're saying, a Black Swan event happening.
Lee, final thoughts?
I think there's just way too much systemic risk to really be in anything but precious metals at this point. I mean, you asked me about the commercial paper market. I just looked it up. The current yield on the 10 years, 0.1%. So what are you going to do with 0.1%?
Companies sitting on multiple billions of dollars. I mean, 1.1%. I mean, it's nothing. It's
and we should really follow the lead of the people who really know what is going on. And now's the time to start buying precious metals if you haven't yet already, because when that final dip comes in the spot market, there's going to be no around.
Yeah, it's not going to be there. Physical won't be anywhere to be found.
Yeah.
Anyways, with that note, thank you for joining me, guys, on short notice and going down the rabbit holes that we're all in right now. Until next time, guys. Thanks.
See you guys.
Everyone.